Entrepreneurship and real estate investment are among the most rewarding and challenging endeavors anyone can undertake. However, one of the most significant challenges is raising enough capital to get started. Many entrepreneurs and real estate investors often feel overwhelmed and discouraged at the thought of starting a venture due to limited funds. But, with careful planning and execution, it's possible to raise the necessary funds to achieve your entrepreneurial goals. One of the most straightforward strategies for raising capital is to use your personal savings. Saving money requires discipline and planning, but it's a tried and tested way to demonstrate your commitment to your venture. By setting aside a portion of your income every month or selling off assets you no longer need, you can accumulate enough capital to get started. One benefit of using your own money is that you won't have to worry about repayment terms or interest rates. Another option is to borrow money from family and friends. This approach can be more straightforward than seeking funds from investors, as those close to you may be more willing to lend money. However, it's essential to treat this option as a business transaction, with clear repayment terms and interest rates. Additionally, borrowing from family and friends can strain relationships, so it's crucial to communicate openly and honestly about the risks involved. Crowdfunding has become an increasingly popular option for raising capital, allowing entrepreneurs to raise small amounts of money from a large number of people via the internet. Crowdfunding platforms like Kickstarter, Indiegogo, and GoFundMe provide a platform for entrepreneurs to pitch their ideas and attract potential investors. However, it's essential to have a well-thought-out business plan and a compelling pitch to stand out from the competition. Crowdfunding can be a time-consuming process, but it can be an effective way to raise the necessary funds. Angel investors and venture capitalists are another option for raising capital. These investors are typically more interested in high-risk, high-reward opportunities and may offer significant amounts of capital in exchange for equity in your business. However, securing investment from these sources can be challenging, and you'll need to have a clear understanding of your market, competition, and revenue projections. Before you start raising capital, it's essential to have a clear business plan. Your business plan should outline your vision, mission, market analysis, competitive analysis, revenue projections, and funding requirements. A well-thought-out business plan can help you attract investors as it demonstrates your understanding of your industry and your ability to execute your vision. While there is no one-size-fits-all approach, exploring a combination of the strategies mentioned above can help you turn your ideas into a reality. One way to increase your chance of success is crucial to establish credibility with potential investors. Investors want to know that their money is going towards a viable venture with a strong potential for growth and profitability. There are several ways to provide credibility and instill confidence in potential investors. One of the most important steps you can take is to have a well-written business plan. Your business plan should clearly outline your vision, mission, market analysis, competitive analysis, revenue projections, and funding requirements. A well-crafted business plan shows investors that you have thoroughly researched your industry and have a clear understanding of the opportunities and challenges you face. It also demonstrates your ability to think critically and execute your vision. Provide a list of team members and their credentials. Investors want to know that the people behind the venture have the necessary expertise and experience to execute the plan successfully. Include a brief bio of each team member, highlighting their relevant experience, education, and accomplishments. Collateral is another way to secure an investment and establish credibility with investors. Collateral can be anything of value that can be used as security for a loan or investment, such as real estate or equipment. Providing collateral shows that you are serious about your venture and are willing to put your assets on the line to make it successful. It also mitigates the risk for investors, as they have something to fall back on if the venture does not perform as expected. It's also crucial to be transparent and open with potential investors. Provide them with all the information they need to make an informed decision, including financial statements, market research, and risk assessments. Be upfront about the risks involved and the potential for losses. Honesty and transparency build trust and credibility, which can lead to long-term relationships with investors. The Valhalla Ventures can help you build this dream. Call them. This, and comprehensive and fact-based articles like this, can be found at www.reiguideservice.com in the blog section, or on YouTube, Rumble, and many places podcast can be found. This information is free and is provided to give real property investment guidance to those looking to expand their circle of knowledge. Thank you for listening.